What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel focuses on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be applied to any company that's publicly traded on the U.S. stock market. Make sure you hit the subscribe button and the notification bell. That way you're alerted to when we release new videos. We release nightly and weekend videos, and those focus on identifying the triggers and targets for trades ranging from scalps and intraday trades to long-term trades and swings as well. If you want a deeper dive into how we set up our charts and our trading levels, check out the bonus content on our YouTube page. And for more information about the strat, which is the base of our charting and trading method, you can find more free information in the description of this video. Let's take a look at the agenda for today's video. We'll go ahead and recap today's intraday price action. We'll zoom out a bit to look at the week, month, quarter, and year price action, and then we'll zoom back in to set our 4-hour markers and our triggers and targets for Tuesday, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year. So just getting into the charts, here's the intraday price action. You can see we ended the day with a 15-minute broadening formation, which are these light blue lines here. So we gapped up, obviously. We got some price action to the upside, didn't have a lot of momentum with it. So when we did start to break down, you could see we got the lower high here on the 5-minute right at the opening print. You could have entered puts at this point, and you get a series of lower highs until you finally get a higher high right here. So you could have basically taken the trade from, we'll say 34.88 to, what is this, 34.66, so 22-cent move, which isn't too bad if you're scalping, if you got a number of contracts, and if you're at the money or in the money. At the same time, at this point, the day had been moving for a little while, and we could zoom out to the 15-minute, and we can see that this was simply a lower high in the 15-minute time frame. So you could have stayed in those puts, and once again got a lower high here and got the push down to the end of the day. You could have exited your position at the previous high day, closing the gap. You could have fully exited the position, or you could have scaled out of a majority of your position, and depending on when your expirations are for your contracts, you could swing those overnight. So we did get another lower high on the 15-minute and pushed to a lower low and closed basically at the lower low, almost at the overnight low. You can see we're getting towards these 15-minute broadening formations, this 150 fib extension from the September 17th gap and go, which has been some support in the past. So in the intraday perspective, we can see why price action ended there at the end of the day, and we'll see we'll see if we'll continue to get any continued price action to the downside, or if we turn what was resistance at some points into support, further support. We got a little bit intraday support here, obviously had the gap up. So if price action ends up bouncing here, turning that into support, then it's another plus for the bulls. We do have this 15-minute broadening that kind of played into things here today as well. It pushed up and rejected off of that broadening for that second push down. So we'll see if that continues to come into play, but there's also some new 15-minute broadening formations that were formed today, so we'll see that on the charts for tomorrow. So you can see how it played out, how we our repeatable strategy here. You buy puts with lower highs at or underneath the opening print, and you look for the previous low a day and overnight low as your targets, right? So made it to the first target, almost made it to the second target. Again, depending on when your contracts expire, you could have held those overnight. We'll see what tomorrow brings. There's a lot of economic data that's being released tomorrow, so we'll see how those play into price action tomorrow as well. Looking at things from just the day perspective, let's go ahead and zoom out here, get a better chart. All right, we can see that we did set a lower low, but that was coming from a higher high. So that's what we were talking about, is we're just creating a broadening formation, and you can see we've already bounced from that broadening formation on Thursday, the bottom one that created the bottom part of the broadening formation, and we're pushing back up. Now we have made a higher high, but you can see the candle structure, right? It's not exactly bullish, right? It's not an inverted hammer, but the body is fully red. It's a big body candle. Wick at the top, no wick at the bottom, meaning price action tried to push up and it was not accepted, and we pushed down and closed at the lows. So not only did we close at the lows, we closed inside of Friday's action. So, could this be just a continued broadening formation, just squeezing it tighter, right? Maybe we get the higher high here and then a slight lower low here with just maybe just a gap close here to the bottom side, right? That could be a lower part of the broadening formation, just squeezing here. Kind of how we did back here at the beginning of this 11-week sideways action. So if it is setting up for another 11-week range here between 31 and 35, we'll be ready for it, just how we were back here between 24 and 28, buying puts and selling calls at the top and buying calls at the bottom. So we'll see how it turns out. If we do start to range, then we'll have that 11-week range prior to this in mind, and we'll treat it how it comes. Some could say this was just a bull flag here. We could just be creating another bull flag here. So that's how we're looking. We did go 2 up on the week. Let's pull up the week chart. Right, so we did go 2 up on the week, meaning we this week's high is higher than last week's high. Let's go ahead and bring this out. There we go. This will illustrate it a little better. So we went above last week's high. Again, that 36.15 is what we're shooting for, the higher high on the at the beginning of the year before the precipitous drop that we had to the April 7th low. So we are still shooting for that 36.15. It's a magnitude on a couple of different time frames from the week all the way through the quarter. So we'll see how that comes into play this week. Do we reach it? We're not too far away. 34.02. We're strangely enough, we closed even from where we closed on Friday, right? We closed at 34.02 on Friday. So not from an overall perspective, we didn't go anywhere. But intraday, we did poke 2 up on the week. We'll see if we get any follow through to the upside, or if we're going to get a push down. Do we get a bearish engulfing candle on the week, go and close this gap down here, possibly, or do we just set up failed 2 up on the week and possibly go 2 down next week to make a higher low or something like that? Possibly could put us back down below this weekly broadening formation here, right? So we haven't fully defeated it. We haven't put in a higher low above it yet to really cross it off. So that's why we've kept it on the charts. If we do pull back within it, then then the previous range that we were in is at risk. That 28 to 24, 29 to 24 range, we could pull back into that. But we'll see. Again, we're in that September-October range. Worst performing months for tech. Haven't really seen any weakness so far in September. So now that we're getting to the end of September, do we see some of that seasonal weakness come into play here, and that brings us down? Again, it wouldn't be the end of the world, because we could go all the way down to 2380 before we make a lower low on the week perspective. So we're in an uptrend on the week. Pullbacks should not be unexpected. In fact, they should be looked at as opportunities to continue, to add to your long-term positions, whether they be shares or leaps contracts or even midterm swings. But until we, especially until we get into some type of downtrend on the week perspective, there's very little to say that this isn't just buying the dip territory, right? So that's what we've got from the week. Let's go ahead and speed things up a little bit here from the month. Let's go ahead and bring out one without RBS. So from the month, again, we're still a solid 2 up after a bullish engulfing candle. Looks like we're defeating this monthly downtrend line. We've got the gap above. We still got the gap below, so there's room for pullback, but the month is almost over. We've got one more day left in the month, so we'll see how we close out. Again, a lot of economic data, but it could go either way. Either way that we look at it, though, the month is, unless we have some crazy pullback, the month is going to close pretty darn bullish. Again, we've triggered this kind of, I don't want to say sloppy, but it's very, very combined 3 combo 2 down, combo 2 up, trying to reach this 36.15. Again, let's go to the quarter here. The quarter is in the 2 down, 2 up reversal, right? We had the 2 down last quarter. Now we're 2 up this quarter. The target, or the magnitude for that, after the entry here, this high, the high of last month's or last quarter's candle magnitude is the high of this candle. So that's that 36.15 that's coming into play again. Again, if we get that 36.15 and breach above 36.15, that triggers the 1 combo 2 down, 2 up on the quarter. That magnitude is this 70.08, the high of the candle to the left of the 1. So again, not saying it's going to happen this quarter, next quarter, even the first quarter of 2026, but that would be the ultimate target. As long as we're above this 36.15, you'd want to stay in your longs, looking for an ultimate target of 70.08. From the year, again, we've gone over this many times. We've reversed things around. We had the 1 2 up 2 down trigger, didn't quite reach magnitude, producing what looks like a higher low on the year perspective, hammering up, flipping the year back green after bumping our heads up against that 28.13 level for that during that 11-week sideways action. We flipped green, we've stayed green. If we can end the year on this hammer, or even a bigger solid, or not solid, but a bigger body to this candle, that just gives us more momentum to possibly get the 2 up next year, with triggering the 2 down 2 up, targeting again that 70.08. So with the higher low on the year, technically still an uptrend. If we can go up and make a higher high, that locks, puts the uptrend even more in force. So we'll see how things go. We don't want to get ahead of ourselves, but that's how everything looks at this point in time. All right. So I think we've gone over intraday. We've zoomed out a little bit. Let's zoom back in and let's get our triggers and targets ready for tomorrow. Let's go ahead and bring up our. Actually, we'll look at it from the scalp perspective first. All right. Let's go down to the 5-minute. Let's just kind of review the rules in case anybody's new to the channel. Otherwise, this is. Oops. This is part of the repeatable strategy for the scalping perspective, at least. Right, so we've got previous high of day. These are our 4-hour markers here. The previous high of day, overnight high, previous low of day, and overnight low. Those are the major 4-hour markers that we want to always have on our chart. Now, we've got some honorable mention levels here. We've got this 35 flat, which is the opening print for the week. That was the first price traded today, Monday. The first day of the week. We've also got our 4-hour trigger to the upside on the in this gray here, in the 4-hour to the downside, which coincides with the previous low a day. So let's say we get a push up, overnight, and we end up opening inside yesterday's price action, right at the 4-hour trigger. Let's see. Let's pull out the right tools here. All right, let's get a level set. There we go. Let's just say we open up somewhere around here, right? If we get price action to the upside, say we push up to the week flip, that would flip the week green if we get back above that 35 level. Right now, the week is red. So if we push up to that level, maybe we get some, pullback action there, and then we get a higher low above this opening print level, or even at the opening print level. That's when we want to enter calls. We would want to enter calls, and we would target the previous high of day. Now, overnight, this overnight high is more than likely to change. So the overnight high may be up here, or the overnight high may still be below previous high day. Let's say overnight high. Let's just move it here. Let's say overnight high is there, right? So if we get the price action to the upside, the pullback, and we get a higher low, we want to enter calls. First target is actually the overnight high, and then previous high a day. Now, if overnight high is above previous high a day, then that just switches the targets, right? So we get the push up, we get the pullback, higher low at or above opening print. That's when we want to enter calls. First target is previous high a day. Then it would be overnight high if it's up here, right? After that, then you kind of get into your targets for the 4-hour and day perspective, and we'll get into those in a second here. But the same is to the downside, right? Say we get price action opens here, we get a push down. Say we get a bounce off of this 200 fib of the September 17th gap and go, and we get a push back up, and then we get the lower high at or underneath the opening print. We want to enter puts, just like today's price action, and then we would want to target the previous low a day and then overnight low. After that, you look at your 4-hour and your daily targets, right? So that's how we play. That's the repeatable strategy. That's the proven strategy that we use every day to make money from a scalping perspective. Now let's go ahead and pull up our 4-hour chart. We'll go back out here to our swing, and we can see that we did trigger the 2 up 2 down on the day, right? I'm sorry, on the 4-hour, and it almost reached magnitude. But even if it does reach magnitude, that's not necessarily, I mean, it does look like it could be a good reversal point, but we do still have last week's 50%, which we've talked about this many times, is a lot of times tested and a bounce point for continued bullish action. If we drop through last week's 50% and we get lower highs below there and we continue to push down, that's obviously weakness and or momentum for the bears, right? So this level right here could be a reversal level. We could see that, it's kind of there, but I think a little bit lower would be the level that it would reverse. Again, if we get to this magnitude, it does just trigger the combo two up. Combo two up, two down. So then your next target will be the low of this candle, 32.83, which again is below this 50% line. So we could see that as, if we reach that magnitude, we could bounce from there, retest this 50% of last week, and then however it resolves is, how we may play to either to the downside or the upside after that. Again, not getting into any too much predicting, just showing what we would do if price action does go to that side. If it does go to the upside tomorrow in that first 4-hour candle and we go above the high of the second 4-hour candle of today, that would trigger 2 down, 2 up. Again, triggering at the high of this candle, and we would be targeting the high of this candle, so that's 35.49. That was today's high. If we get to that point, we've got this 4-hour broadening formation, and again, last week's high that did put up essentially resistance for this morning's price action, so we'd have to look for any types of reversals there, but at that point, the week should be flipped green. So if we do get any corrective activity here and maybe a slight push down, it could just be to test that weak flip again and put it in as support before we push higher. From the day perspective, go over this real quick as well. We had a 2 up, but it was a failed 2 up. So we do want to watch for downside action. If we do go below today's low, that triggers a 2 up, 2 down, targeting the low of this candle. And that again puts us back below last week's 50% line. If we got a lot of momentum to go into the downside and we breach below the low of this candle, that triggers the combo 2 up, 2 down, which then targets the low of Thursday's candle, which is last week's low, and we've got that gap right there at the bottom. Daily broadening formation slightly below that, and the market maker's expected move low. If you're not familiar with that level, make sure you check out our weekend video, and we go a little bit deeper into where we get that level and how we put it on the chart there. But I could easily see us pulling down to this market maker's expected move low level. Forgot I did put an extra fib on a fib extension on here over the weekend. So if we just look at the move from let me pull it in a little bit. Yeah, from the April 7th low to the July high, and then the pullback into the beginning of August before we started that 11-week or for the 11-week sideways action was established. With that run up and pullback, that fib extension, that 61.8 is that 35.69, and today we hit that 35.49, right? Was it? Yeah, 35.49. So you can see we got real close, 20 cents off from that. And we could just be, hitting that 161 fib extension and pulling back to test either the 50 or the 38.2 fib extension. So we'll see. That 38.2 fib extension lines up really closely with that market maker's expected move low, just below that gap to the downside in that daily broadening formation. So it wouldn't surprise me at all to go down and see this, 30.81, 30.68, 30.50, something like that, possibly even 30 flat. Not too far below that is 29.66, which is last month's high, which is the origination of the breakout point. So I've talked about it all last week that a retest of this level, because we only tested it intraday, is perfectly within the means of how price action should move, right? Previous resistance should be tested and established as support. So even if we don't make that move tomorrow, or even Wednesday, we could just ride this daily broadening formation down through the end of the week, poking through this market maker's expected move low, testing that month high before we get some type of bounce, if we get a bounce. So we'll see how it goes. Again, that seasonality, keep it in mind. We haven't seen it yet, but you got to keep it in the back of your mind. We're not going to get ahead of ourselves, but we'll just play price how it comes, right? So that would be the 2 up, 2 down reversal. If we, end up overnight pushing up, we get some, economic data in the morning that pushes price up even more, and we go above today's high. That's a 2 up, 2 up continuation. And then we're just looking for our extended targets that we have from the September 17th fib extensions that are on our scalping chart, and then the market maker's expected move high. That would be probably it from the day perspective. We'll look at where things come into play from a week's perspective if we push up to that level later on this week. So let's just go ahead and look at the numbers, and we'll see here that we have for Tuesday, September 30th, there will be 63 trading days left in 2025. Previous day's close, which is today's close, is 3402. I forgot to put the flip in here, so that is 35 flat. So we'll say this goes green at 35 flat, and we gotta make it green so it makes sense. So we can see here that the week flips green at 35 flat, the month flips red at 2408, the quarter flips red at 2438, and the year flips red at 2813. We've got a market maker's expected move plus or minus 321. Again, check out the weekend video if you're not familiar with that. That gives us a range of 3723 to 3081. We know where our gaps above are and our gaps below are. And for the 4 hour, we talked about that before. It's a 2 up, 2 down, triggering at 33.99 with a magnitude of 33.86 with an extended target of 32.83 and then 32.59. To the upside, it's a 2 up, 2 up continuation, triggering at 34.74, magnitude of 35.49, extended targets of 35.95 and 36.15. That 36.15 is that magic number, right? It should be drilled into our heads by this point. 2 up, 2 down on the day, triggers at 33.99, magnitude of 32.83, extended targets of 32.39 and 31.14. To the upside, we would have a 2 down. Oops. I don't know why I have that. 2 up, 2 up. There we go. 2 up, 2 up, triggering at 35.49 with the target of 35.95, 36.15. Again, that magic number, and then 36.50. From the week perspective, we can see the 2 up, 2 up has triggered. That's why it's underlined. It's not in bold like these down here because they're not in force. But it did trigger. It triggered at 35.30. Today's high was 35.49, so that's what triggered it. Target is 36.15. Again, that's a higher high on the week perspective. So there's that magic number again. If we reach that, then we have extended targets of 38.45, 39.26. We already looked at the September and the quarter and the year charts, so I won't go back to those charts. I'll just recap the triggers and targets again. We've triggered the 3-2 up at 29.66 on the month. We've already reached 2 of our targets. Just looking for that 35.95 and that 36.15. Again, that magic number that would give us a higher high as well on the month perspective. From the quarter, we have the 2 down, 2 up that's triggered and in force, triggered at 25.84. The magnitude is at 36.15 magic number. If we do reach that, then we've got extended targets of 38.89, 42.04, 44.54. And again, the year has turned around. It did trigger the 1 2 up, 2 down at 23.50, but it didn't quite reach magnitude. It only got to that 7.23. So we're looking at a higher low on the year perspective. We flip back green, as we can see from the year flip up here. We're above 28.13, so everything's looking good for a turnaround on the year perspective. So that's all we have here for your triggers and targets. I hope I haven't dragged the video out too long. I just wanted to make sure I got enough information in here to help people make educated decisions on what they want to do with their trades. It is up to you ultimately. Only you know your risk profile. Only you know how much money is in your account, and it's up to you to make those decisions, right? We're just trying to make it a little bit easier for you to make your own decisions out there. So, if you like the video, if you made it this far, definitely give it a thumbs up. It helps the video helps the channel grow, right? We're not out here selling anything at this time. We're just trying to give out as much free advice as we can, devoting a little bit of time to every night to try and help everybody out there that we can. SOXL is a great trader, not only for the beginners, but for seasoned traders as well. Low premium, high delta, low theta, high underlying delta for the for the ETF. So you can make a lot of money with just a little bit of input, but you got to make sure that you know your levels and you're executing with precision, right? So hope everybody enjoyed this. Make sure that you get some good rest tonight. If you're watching this in the morning, then I hope you had some good rest and you woke up refreshed, ready to trade. We've got our triggers and targets ready, so we're not guessing. We're not getting out there ahead of ourselves. We're just taking what price action gives us, and we're taking those levels to the next levels that we have, right? So hope everybody enjoys it, and I look forward to trading with you.